All right, welcome everybody to the crypto market and the stock market update. Today, I have two special guests who have been on our pod before. They've come on last year and the year before that to discuss all things related to the stock market, related to the macro. And we here at Alpha Trades are pretty heavy into crypto. But as you guys very well know, over the past year or two, our markets have been increasingly correlated with the stock market and the macro picture. So that's why I have today's guests on with me to discuss what's happening and what their thoughts are on the market. So welcome Faisal and welcome Austin.
Hey guys. What's up? Long time no see.
Austin, you're gonna have to get a little bit closer to the mic, just FYI when you talk.
Oh, gotcha, okay.
Okay, so let's go through today. I mean, what are your guys' thoughts on today? Heck of a day in the market.
Yeah, it's been a couple the past couple of days have been really good so far. I think you had a really deep opening on Tuesday where you had a lot of these stocks, these core stocks gap down, growth stocks gap down, and then had a major recovery Tuesday and haven't, really let up since then. There's been a lot of moving parts. Oil has come down significantly. You've had what seems to be more of a capitulation in things like copper and other commodities. I think they've bounced back significantly from yesterday. You're just seeing a lot of factors have a ton of volatility, and I haven't even talked about the dollar. So it's just been a whole whirlwind. I still think that this is kind of like a bear rip. So, it's pretty difficult to assume where the short-term top is going to be, but I think it's coming very soon.
Okay. So real quick, let me just chime in and then I'll let Austin answer. So today, I totally agree with you. Heck of a day in the market. Big moves. We had a pretty big gap down candle and gap down across the board in the stock market. I just want to show you all that was where we had that big gap down. And then by the end of Friday, or not Friday, by the end of the day on Tuesday, we recovered that entire move. And then basically Wednesday and today, we've had this big up move in the market. Now we're staying elevated at the highs. So I just wanted to show you all that in terms of this chart, what Faisal was talking about. I'm glad you mentioned oil and copper. So I'll let Austin chime in on that.
No, I pretty much agree with what Faisal is saying. Market actually, the last week, in my opinion, was anticipating a lot worse numbers. They were expecting oil to be much higher and the inflation numbers to be heading north, which had turned out to be not to be the case. And what you're seeing is really a typical bear market rally. And I pay more attention to the big picture as to what's going on, and I've been saying that for quite some time that over the last few years or so, Fed has given us so much to drink that this hangover is going to last for a while.
And you're talking about liquidity, right?
Yeah. So Fed has provided so much liquidity. And the gains that we have seen over the last few years were abnormal in a real sense. And now we just have to to go through this period of consolidation where the market just adjusts, as the liquidity is taken out. It's now totally the opposite of what we were seeing before, So I've been through these cycles before. I've seen what happens when Fed decides to walk away, and it's a pretty painful period. These bear markets could last up to maybe 8 to 18 months or so, and I think this time it may take even longer, because we had it good for so long.
So just to sort of summarize what you're saying, you believe that we had above average returns for the last several years, partially because, or largely because the Fed had sort of induced this sort of liquidity driven market, and they had eased monetary policy so much so that the market itself got a little bit too complacent, too comfortable with so much money and so much excess. And now we're peeling back those returns, especially the returns from the last 2 years, which were largely driven by Fed liquidity or Fed excess liquidity because of the COVID crash, correct?
Exactly.
And I want to bring in these topics of oil and rates and dollar and copper that Faisal mentioned as well. So we'll tie these things together. So my understanding, and I want you guys to sort of go through this with me, is here's sort of the relation that I see for the dollar and copper and oil commodities and then stock market in relation to just, say crypto or even just stocks overall. Okay. If you're a bull and you are hoping that a bottom is in and you want the market to start heading back up, aside from what the Fed does, which is reducing quantitative tightening or going into easing, stopping interest rate hikes, aside from that, okay, we want to see signs as a bull for the dollar to start breaking down. We want oil and copper to also start showing weakness and start breaking down. And then we want US equities, especially on the growth and tech side, to start seeing a bid. And one of the reasons why we want to see oil and copper, main commodities, industrial commodities, to start breaking down is because that may be able to break the back of inflation. Do I have that correct?
Pretty much so. And we're starting to see the inflation numbers coming in, relatively speaking, better now, and which is showing the supply chain issues seems to be easing off.
Yes, that's it.
Slowly and gradually.
Yep. That's the main difference between what's going on now versus a couple months ago. The demand destruction is actually working. I mean, the Fed chairman said it, I think going up maybe last meeting or so, he said there was high inflation even before the war. And that was primarily due to all these supply chains, everything being clogged up. I think some data came out just this week. I forgot by who, maybe by JP Morgan, that I think shipping, like the amount of blockages within median logistics has gone down by 30%, which could mean, demand has totally been destroyed, or somehow, some way the world has figured out how to move goods much better. And so you've had even things like wheat, which in all theory should definitely be at an all-time high price, considering Ukraine and Russia produce so much wheat, and that supply is being totally constrained, and every day that goes by, that supply gets even more constrained, and it seems like, we're back to pre-war levels. And it's not like you can destroy demand for something that's as necessity as wheat, but the only logical explanation of my point was that supply chains just really opened up, and obviously the world was able to find wheat in other areas of the world much easier than expected. So, I mean, okay. Yeah.
So I'll challenge you both on this one point, because I want to get a bit of a discussion and a banter going. So we have obviously some elevated prices in commodities. And as Faisal mentioned, we're going through a process that the Fed is sort of inducing this demand destruction. There's two ways to obviously kill inflation, which is being able to rein in the part of the supply chain, to be able to rein in the actual products themselves in terms of their supply, versus actually destroying demand and making people more poor, if you will, right? We don't have control on the supply side, but we do have control on the demand side. The fact that we don't have control on the supply side tells me that at any point, supply in that prices can still once again run rampant, because they're not in our control, right? Because the goods themselves can become more and more expensive, thus more and more scarce, even if we have killed off demand. So the question is, who is to say that wheat prices, or if we look at copper prices right now, which I agree have come down a significant amount, and then of course oil prices, which have broken their near trend, who is to say that they can't run back up? And then how do we go about solving that problem?
They definitely can run back up. I don't know if this is the end all be all, the perfect capitulation or so. I mean, I haven't been through one of these cycles, so I'm not really sure what to look for, but you could definitely have things trade within a range. It doesn't have to explode all like that. Like, I think the move that we saw in copper is just a really huge anomaly. That's not something that you're going to get, consistently over the year. I would assume that the range has been made. And also, speaking in terms of the demand, a lot of this inflation being brought down is not just because of demand destruction. It's also because over inventory. In the semi industry, you've had a lot of these companies double order, triple order in the past year because they wanted to catch up to demand. And then now that demand is slowed, they actually have a ton of inventory and prices are coming down naturally. You heard it from Target CEO, you heard it from Walmart CEO. They have so much inventory on their books. I think inventories jumped, what was it, like 30% quarter over quarter from 2 quarters ago to the most recent one, I think in Target's case. And so that means, they're going to have to bring down prices. They're going to have to do sales and get that inventory off their hands. So while, yeah, the demand, there is some scarcity in some goods, I don't think you're going to see that, at least in the shorter term. I think we will definitely be in a deflationary period. I think we're already in one, honestly, to be honest. I think.
Okay, so you're saying that Target has a good amount of inventory, and let's just assume that some of the well-capitalized corporations and other goods, they're now starting to replenish their inventory. Well, haven't we sort of created this negative feedback loop where you've now killed off demand and now you have an excess of inventory? So now doesn't that mean that as we head into earnings season, as we head into looking at the books of all these companies, would they not be facing, more pressure from, say, Wall Street, or people looking at their statements and saying, well, what the heck? Like, you're not going to be able to sell this stuff in another 6 months or 1 year or 2 years, because as Austin pointed out, the bear market or the recession itself could effectively last 8 to 18 months. So then how do you deal with that?
Well, just like I said, I mean, I think right now prices are still high, but you should start to see prices come down, especially like I said, big major retailers are already discounting a lot of goods. So you're right, the demand is getting destroyed, but at a certain point, price has to meet a good level and demand will start to come back and nibble at those prices. So I think we're still in a bit of a limbo, but, it's just, we're still in the early innings of this whole thing, or not early innings, maybe like early innings, but definitely more time needs to go on to see how this thing plays out.
Yeah, and also remember that the global capacity was never destroyed. So these factories just had logistic issues of producing. So now they're producing goods and the supply chain and starting to get back into line, you will have a short period where inventories are going to exceed the demand, and that's where the deflation comes in. Mm-hmm. But remember that the balance sheets of Americans has never looked this good. Yeah. So these people are still, able to have some cash in their accounts, which was not the case prior to the COVID situation. So the things are not dire from the demand side. People can still afford to go out and eat and buy goods and whatever they have you. The market is basically telling you that we are in the first phase of recession. And that's why you're seeing commodity prices, oil prices, all these stocks, all these prices starting to collapse. But in my opinion, the fact that the American consumers' balance sheet is still healthy, you're not going to have just a massive demand destruction. So to me, it seems like we will be in a shallow type of recession, and we will just chug along for a while, and then we'll start to, hopefully as the war in Europe ends, we'll come out on the other side looking even better.
Yeah, for what it's worth, I agree with you. It seems like Jay Powell has pretty much made his game plan clear since the beginning of the year, which is their goal is to, first of all, rein in inflation, do whatever it takes. However, he also stated multiple times that he believes in the soft landing of a potential recession. And so far, we don't have any reason to question the guy because everything that he's talked about since the beginning of the year, they have done from the Fed standpoint. So yeah, I'm right there with you. Now, moving on, price action in the markets, as well as where we are today, right? Today was, once again, sort of recapping, a heck of a day in the markets. What I personally see in just raw price action is it looks like almost everything is hitting its first big area of resistance. If we look at Tesla right here, still consolidating in somewhat of a pennant or triangle. It looks like Microsoft itself coming into a key resistance point around 270. Datadog right here sitting around 107, 110 area. Semiconductors were just getting demolished last several weeks. I don't know how you guys feel about that. And then Apple, of course, coming into the first area of resistance. So price action wise, first of all, how do y'all feel about today? And then just recap of the first half of the year, and then give me your thoughts on how you believe things could pan out the second half of the year.
Previous cycles that I've been through, I pay a lot of attention to semiconductor stocks, and they seem to be the leading indicator on the downside and upside of the market. There's a lot of inventories, and anytime I was telling somebody the other day, anytime you have just enormous demand on anything, whether it's housing, you have semis or any other product, oil, the enemy of these high demand is higher prices, So yeah, we will have. So normally, what you want to watch is 2 quarters of consecutive quarters of numbers coming down, and that normally tends to be the bottom. So hopefully we will see some semiconductor numbers come down. And remember, the market is a forward-looking mechanism. Market will anticipate, okay, the numbers have come down enough, and before the S&P actually bottoms, these stocks, semiconductors will start signaling they'll be up about 50% or so.
And what can you give us some semiconductor names to pay attention to? Some of the leaders that you feel like could give us that early signal in the market?
I would definitely pay attention to AMD, which is run very, very by a very good manager, and they have a great product line, and pay attention to it. And then the stock looks starting to look pretty cheap actually on valuation basis. So pay attention to likes of AMD and Nvidia, or even Marvell. These are stocks that I own, and I'll continue to add to these names once I think that the numbers have been cut on these stocks. Secondly, you want to see financials start to find a footing. Financials are right now anticipating a pretty decent recession, which in my opinion is incorrect. So if the recession turns out to be mild, and then it turns out to be a soft landing, these stocks are going to come back very strong.
And financials, meaning companies like JP Morgan Chase, Goldman Sachs, Morgan Stanley, et cetera?
Correct.
So can you sort of give us a quick understanding why exactly are financials important to pay attention to?
Financials are very sensitive to economy. And you could actually pretty much tell, as the economy rolls over, investors tend to just get out of these financials. Right now, when you look at stocks such as JP Morgan or Bank of America, it tells me that market is anticipating that we're going to see a pretty serious recession. And if that turns out to be incorrect, these stocks will bounce back very, very hard. Mm-hmm. You know, and that's what you want to see. You want to see financial stability in the market. Semiconductors and financials, pay attention to those two sectors. That will pretty much tell you, you know, the market is starting to heal itself.
Okay. So the first half of the year, obviously, we saw a significant decline across growth, tech, semiconductors, and of course, as we're looking at banks and financials. What are your guys' predictions maybe for the second half? I'd like to start off with Austin first, and then I'll jump to Faisal.
My prediction is that we will remain probably pretty choppy through the end of the year, you know, because I remember, pay attention to what the Fed is basically, Jay Powell is saying, hey, the Fed put is way down there, you know. Mm-hmm. Yeah. So what he's trying to accomplish is really break the backbone of this dip buying in the market. You know, the enthusiasm that people are so used to making money in the market. It was so easy in the last few years. So, and that habit does not change very easily.
Agreed. Faisal?
You know, I think it's a little bit murky. I think you're going to have the majority of the market come down. Just to touch on what Austin was saying earlier about he's waiting for semiconductor numbers to come down. While there have been a lot of downgrades in the sector, you've largely seen those downgrades as a result of analysts saying, okay, there's multiple compression within the entire sector, and this is more of a broad market condition relating to liquidity. You haven't really seen the downgrades relating to a type of deceleration in the earnings or revenues. And so, you know, I just checked this weekend the estimates for a lot of top semiconductor names that I watch and equipment names, and they haven't come down more than like 5 pennies. So we really haven't seen that. Can
you give us a few names, please, so I can pull it up?
So, I mean, one that I would definitely keep an eye on is ASML. We've talked about ASML before. It's one of the most important companies in the world in terms of creating the new gen semiconductor chips. You cannot make a 3 nanometer or you can't make the newest gen chips without this equipment that ASML builds for the semiconductor factories. So they are so critical for the next leg of the technology cycle. And so they have been largely hindered by supply chain concerns. So when these machines, they take so many parts to build that I think their total output of machines is like in the hundreds. They don't make that many machines for these factories because it's just so many parts to build. So during the supply chain crisis, they were really struggling with output. And that's why you've seen this stock, even though it has probably one of the most, I mean, it is really one of the easiest stocks to forecast. I can guarantee you that this stock will be up in the next 5 years. It's going to at least double in the next 5 years. I mean, that's a guarantee.
That's not financial advice.
That is not financial advice. You are correct. That's not financial advice. But that's just how, you know, how much I like the stock and how critical it is to the next gen. But anyways, I would watch something like that. Their numbers have not come down, and I expect their business to actually pick up from, you know, where it was last year. I don't really expect them to decelerate because they already decelerated so much. So when those numbers really start to get cut and the fear starts to get priced in, then I'll know, okay, maybe the bottom is coming in. Also, NVIDIA, onsemi is also a really great company with a great CEO. I think they're on pace to do some great things with silicon carbide, which is kind of a new trend in the semi industry that Tesla started. You guys should definitely research that. But yeah, those are kind of the names that I would be watching. So we really haven't seen that fear steep into the numbers. So we could definitely be in a lot more pain for at least 2 quarters, is what, you know, Austin was saying, and I kind of agree with him. So maybe by the end of the year, the market is very choppy, but I think you'll have winning sectors like I think clean energy. You're getting a lot of government assistance now, more so than ever, for clean energy products.
Any companies that I could look up in the energy space?
Yeah, I think ENPH, Enphase, Solar Edge, SEDG, and then an ETF that's pretty good is TAN, TAN. It has some Chinese solar exposure in it, so just FYI. But this is one that I trade from time to time. So you have all these stocks that I expect to do good, and then Chinese stocks. I think they're going to be somewhat of a surprise. I think they're going to do better than American stocks for sure by the end of the year, at least for a 6-month period.
And
yeah, you look at it. Yeah, you
look
at
stock, one of your favorites.
Yeah, it's been one of my favorites for a long time. I mean, everyone was sleeping on this stock last year, 2 years ago. They were talking about XPeng and Neo and things like that. And I was like, why is no one talking about Li Auto when they got the most advanced AI chip coming at a time when they only make SUVs and China just expanded their one child policy? I'm like, okay, the SUV trend seems to be going up. And look at the stock. It's been probably the best Chinese performing stock in the entire Chinese sector. So yeah, I keep an eye out on this one a lot too. And then I think oil, even though oil is going through a lot of whiplash right now, and it's definitely down, I would not be surprised to see it test up. And I think a lot of these companies still have capacity issues. There's still going to be high demand for oil once economies start gearing back up. And there's really not that much investment being made to expand capacity still. So, I think these companies would. I'm not saying they're going to be making 100, 200 times gains, but I think they're going to outperform the rest of the market.
Understood. So both you guys are thinking it's going to be a pretty choppy rest of the year.
For the broad market, yeah.
Okay.
Yeah.
Okay.
But that doesn't mean all sectors. Remember, in every cycle, every down cycle, the amazing thing happens is that the innovation platforms just burst out of steam. We see the most innovation happen during the downturns.
Yes.
And the new technologies are born, and you see a lot of M&A type of activity. So over the even though I'm very cautious over the next 6 months or so, but these high growth companies, they are going to be the one to you don't want to wait until they ring the bell, because they never do. You want to continue to nibble at these companies, keep buying these companies, because they're so darn innovative. And if they see something good, they are so cash rich, they can go and buy those private companies.
Yeah. That's an extremely good point. Like, I think you got to leave it up to the smartest money managers. When Microsoft starts buying a lot of these beaten down public companies, that's when okay, if they think the valuation is good, that means sentiment and the business slide should probably improve. And you just haven't seen that M&A cycle yet. And I think, that's a super important point to keep an eye out on, because there are definitely cash rich giants in this market that are definitely looking to expand. You're talking about Apple, Microsoft, Adobe, I think even CRM, is the acquisition king. When they start buying, I think that'll be very good for sentiment at the very least.
And one more thing I would add is what I have experienced and learned over the last 25 years is, don't be afraid to give your money to the best managers, because downturns are like Christmas days for these guys. These managers are so good. They're looking for an opportunity and to buy great technologies and assets that they couldn't before because of the valuation. And then all of a sudden the valuation just drops. And these guys, at some point, you will see these guys come in and buy up all the assets. I have seen it in every cycle. These guys are so good. They'll come in and buy great technologies when times are tough. And as things improve, these guys are in in the best position they ever were, you know. So
so when you talk about giving your money to the best managers, you kind of mean some of these bigger blue chip giants. But I guess, you know, I'll pose you another question, which is, how does someone like yourself or those who are watching this video, how are they going to find sort of the next, you know, big Facebook or Microsoft or snowflakes for the next, you know, 10, 20 years? Is that even possible for people like us? Or do we have to wait till these companies are 5, 10 years mature and then we dive in? What are your thoughts on that?
yeah, no, that's a very good question. You're always in the hunt for those guys, you know. And normally, you know, I watch a lot of videos, YouTube videos of these CEOs and stuff. You know, I am constantly looking for new managers. I know at least 24 managers that I can bet my last dollar on them that these guys will give me oversized return as long as I keep my money with them, you know. And I'm also constantly looking for the new guys, you know. And a lot of these guys come out of great companies, you know. You see a lot of these managers that came out of CRM or Microsoft and so on that had a very good track record. You know, they built some great businesses inside the bigger companies, and then they go out and become a CEO of a smaller company, and they develop that business into a giant business. You know, so you have to do your homework,
Sure.
but they're out there.
Yeah, I think I want to touch on that. One of the most recent companies that everyone knows about is AMD. I think up until even in 2016, AMD was a single-digit stock.
Yeah.
I mean, and just to touch on what he said about the manager, Lisa Su came into AMD as CEO in 2014. What was the stock price there? I mean,
$4.
2014 was not that. I mean,
$2.
$2 a share. I mean, if you had known and seen her vision and you know how she was able to lead her engineers and developers into this new gen, you could have made so much money. And this is so recent. This is 2014. So I mean, it's very key to betting on the right manager, and it just goes to show you when the right manager comes along, it can just change the trajectory of everything. I mean, look at AMD stock before that.
Also, look at Jensen Huang. When NVIDIA used to be just a nonsensical semiconductor company, and I remember used to trade in single digit.
Yeah.
And Jensen Huang comes in with new vision. You know, he worked at another semiconductor company and ran a division, was very successful. Comes in, becomes a CEO, and the rest is history. You know, so these managers are out there. And I remember during the last financial crisis, Blackstone, a very young manager who had a very good background in real estate, you know, the housing prices were collapsing and everything. And one day I read that Blackstone has come in and bought every available home in the Houston area.
Wow.
And that was the bottom. And these guys made shitload of money, you know. So these men, and I constantly listen to these guys every 3 months. You know, they're building up the cash reserve. They're saying, hey, things have gotten too hot, and we're gonna just be very patient and look for an opportunity next downturn. You know, and again, the downturn eventually happens in business cycles. You know, it's very common, and they're sitting on the cash. With plenty of cash to take advantage again. So these assets that they were not able to buy in the last few years or so, now they can buy them again. You know, so a good manager is one that is prepared for good times and bad times.
Yeah. No, that's a really great point. So I think the final point that I want to touch on is you guys have obviously gotten a little bit more familiar with the crypto markets. We often have conversations about them quite a bit. Well, first of all, how does it feel to go through your first, 70 to 90% drawdown and What are your thoughts? I mean, just overall in the crypto market, do you feel like things are imploding? Do you feel like, this technology is bullshit? Or do you feel like, okay, there's still something here. I still want to be an investor. I want to find good crypto projects.
Oh, you're the crypto dude here. I'm still not on the crypto train. I have yet to buy my first crypto coin, but I think it's coming. I think just looking at it from an outside perspective, I was never totally sold on it, especially what I pay for. What is that price comprised of, and it always kind of bothered me. And so I'm not really surprised about the volatility, but once again, I think you have a lot of talent in the crypto industry, and this feels like a washout where just like in 2000, you had a complete washout of all the junk companies, but there were still some gold mines that were left, the Amazons, the Microsofts and everything that were able to reinvent themselves and build on what was the internet, because there is value in the blockchain, just like there was value in the internet in 2000. And even though you had prices collapse by 90%, that doesn't mean the value of the internet is essentially gone. I think it'll take time for crypto and developers to reorganize themselves, reorganize their mission. And my biggest thing was back in 2017, 2018, when the last bubble happened, I said, before I ever think about buying crypto, the only way that it can create some artificial value, in my perspective, was if there was some type of ecosystem built around it. And even though I have absolutely not been a fan of NFTs, that is literally the first step in that kind of theory that I always had. And so even though I've never bought an NFT or anything like that, I can see crypto building towards that economy to where, okay, this coin has proprietary value for this product that I cannot buy with US dollar, that I cannot buy with my currency, and it'll be a digital based product. So I think it's just, a washout, but in the end, some project will survive and some won't. I wish I knew which ones would, because you'll make a ton of money because the volatility is insane. But that's my opinion.
No, I think what Faisal said is so correct. That in 2000, we had internet stocks going through the roof, and 90% of the companies were not making any money, but the sky was the limit. And then the market collapsed, and a lot of these stocks went down 80-90%, and people literally said, I'm never ever touching this thing again. This is all crap. And from that period, the new companies were born that were actually designed to make money and have free cash flow and so on, and real businesses. And so in my opinion, that's exactly what's going to happen with crypto. You had a lot of leverage and a lot of enthusiasm about these projects, but I still have not seen projects that consistently can produce free cash flow, have a real business model yet. And I think in the next phase, you are going to see that. The crypto projects are going to be like real businesses. And so I'm still very bullish. I believe in blockchain, and I think you are still in the first inning of this whole thing.
Yeah, only in this cycle have I seen true ways and measures to actually value these projects. And that has been kind of fascinating to me, because the same models that were applied to, say, traditional companies, price to earnings ratio, we have our own price to sales ratios, the amount of revenue that a crypto protocol is generating. And all that stuff is really fascinating because you could see it in real time. You could see liquidations happening in real time. You could see money being moved in real time, transaction activity, users being onboarded or offboarded in real time. That to me is one of the most amazing parts of crypto, and it's slowly developing. You're right. These are the very early innings. We have a question from the chat. Chaos, our friend, is saying AMD and NVIDIA are heavily tied to crypto mining, proof of work. Effectively, he's trying to talk about how as crypto mining overall starts to go down, he believes that AMD and NVIDIA will be hampered significantly. Do you guys believe in that?
I forgot how much of, I don't know if AMD reports its crypto revenue. I know Nvidia does, and I believe it was like 11,
Yeah, 11, 12%.
11 to 20, between 11 to 10 to 20% of it. At one point, I remember in 2007, or not 2007. If you go back to 2017, when the first crypto bubble popped, you actually had Nvidia stock pop too. And I remember the headlines back then was Nvidia got a lot of its growth back then from crypto mining and things like that. There was such a boom in that industry that it did create some cyclical nature of that. And I think that was the top of Nvidia, at least for that run. It went from like 75 to 200 and then back down to 120 after that crypto pop. But no, I think these businesses are very diversified. I think sure they'll have some revenue declining from crypto mining subsiding, but they're in everything. I mean, I think 5 years ago, no one thought Nvidia would be in autos or AMD would be so big in data centers, and they're proving to be very competitive in all those different areas. So I think crypto is becoming less and less of a revenue driver, but it's still if when times are good, it could still add that extra juice to those stocks for sure.
Yeah.
I think you want to own these. I don't even pay attention to all these things. I own AMD and Nvidia primarily for their AI exposure. I think the next biggest growth story that you want to pay attention to is AI, and companies that are in the forefront, such as Microsoft, Nvidia, AMD,
Tesla,
and all these companies. You want to buy these assets for that reason. Crypto is going through their growing pains, and it'll take time, but they'll be back again. The miners will be back pumping out coins again. These technology companies are in a very, very unique place. To me, this AI growth story is very misunderstood and has a long, long way to go.
Fantastic. Let me see if people have questions from the chat. If not, I just have maybe one or two more things to talk about, then we can wrap it up. Is there anyone in the chat that has questions? All right, let's see what they say. I wanted to bring up just a couple of things for you guys to chime in on. This was quite fascinating to me. Since 1932, every time the S&P 500 was down at least 15% in the first half of the year, it finished higher in the final 6 months with an average return of plus 24%. That is interesting.
It is.
There's another one. Okay, so today's I think big sort of news event was mortgage rates, plunging to 5.3%, biggest drop since 2008. What are your guys' thoughts on the housing market right now?
Oh hell! I mean, I was a big believer at the beginning of the year that capacity, because of all the supply chain issues and everything like that, that capacity would win out and that prices would definitely stay higher. Due to just capacity taking longer to come online. I was totally wrong. I mean, there's like, there's a whole capitulation in housing right now in terms of flippers, people who are flipping houses this time around. Once they finally got all the tools to complete their houses, they're getting scared now. People are putting on the market. I mean, more homes are coming on the market now at a faster rate in the last 2 years. It's just seen a very exquisite jump, and I think it's primarily just based on fear that demand is shrinking up, and people are like, okay, if we had homes, we got to get this inventory off our hands. And so there's definitely a lot of panic, and I think interest rates are only going up, at least in the short term. So we might be in for a little bit of a ride.
One of the things that Fed pays a lot of attention to is affordability of the housing, and right now what Fed is really trying to do is jack up rates to kill demand and bring home prices back to the median level, you know, and which is good for the economy, good for long term. So normally you want to buy housing when nobody wants to touch homes. You know, you will see these stocks go down 70, 80%.
What are some housing stocks that we should be looking at?
DHI is the best.
DHI is a very well managed company.
Yeah, it's the best managed company. Lennar is cool. They actually have some unique proposition where they work with Amazon to make like very tech friendly homes. I always thought that was very interesting. LEN, yeah. And then I don't know. I mean, it's been a bit. ITB is a good home builder ETF, and then XHB is a good home builder / home improvement ETF because there's also things like Home Depot, Lowe's, Restoration Hardware. I think things like that. So it's a little bit more broad. It's not just home builder centric, but still in the housing industry.
I think what I like is Blackstone.
Yes,
it is not a pure real estate company, but because they're into every aspect of real estate, you know, and it's run by a wonderful guy, you know, very smart guy, and I own some stock in it, and if it pulls back more, I'll probably keep buying these guys, you know. So, but I still think that real estate has a way to go on the downside.
Okay, perfect. Do you guys feel like maybe housing as a market will be sort of the last domino to fall within this larger bear environment?
Oh, maybe. I think if you're talking about the deflationary shoe, yeah, yes. It might be the last shoe to drop because supply is coming online pretty fast. Homes from home builders are coming online a lot faster than what people expected 2 months ago. People are putting their homes up for sale a lot faster than 2 weeks ago. Yeah. It's just a perfect storm.
Some of the cities that I was watching and I found on Bloomberg, Phoenix, Dallas, parts of California, Oregon, you know, some cities on the East Coast as well. They're starting to see inventory ramp up. Of course, there are other parts of the country that don't really have that kind of, higher inventory rate. But yeah, I think you're totally right. It seems like the homes are definitely getting listed and people are starting to recognize that whether you were a flipper or you bought a bunch of homes, thinking that you can rent them out or, improve them and sell them quickly on the market, whatever, now it seems like they're regretting that decision.
Yeah. I mean, if you listen to Jay Powell in the last speech, he said, he told you, he said, home prices are too high in this country.
Yeah. So last question, how many shoes are there to drop and which ones have dropped already?
Oh, that's a good one. Well, I think one of the best, not one of the best ones, one of the most noticeable ones was the commodity bubble. You're seeing the slowdown in the economy already with copper just dropping like a rock, and all commodities pretty much dropping like a rock, despite all these macro headwinds for these prices. And I think the dollar going up as strong as it is, it's going to create even more headwinds for companies that are already expecting a slowdown from the consumer. You're going to have that dip into profits a little bit. I don't know. I mean, there's just so many moving parts because, a month ago to 2 months ago, you just didn't think the dollar was going to be as relevant as it is today. And now, you're like, okay, this is going to affect commodity prices. And I mean, I guess as it goes up higher, commodity prices will stay somewhat lower, or at least they'll have that headwind. And that will help costs overall. But yeah, I just don't know that there's a lot. I think there's multiple market cycles, not just pertaining to commodities that have to happen. You have to have maybe 2 more cycles of capitulation in the broad market for me to feel like, okay, enough fear has come out. I mean, you still haven't seen the VIX above 40 yet within this entire cycle. And I think historically speaking, that's an anomaly. You should really see the VIX at least trade above 40 one time before a recession bottoms out. So, there's multiple things. I don't know if I touched on all of them, but
Yeah,
there's
yeah.
a lot.
That's perfect. So last thing I'll wrap up with is, today was such a big pop in the market, and because it was such a broad pop across crypto, across equities, and even say meme stocks and whatever, I basically covered my longs and once again went significantly into cash. Just wanted to ask about your guys' positioning, your thoughts on today, rest of the week, or next week.
Yeah, I think tomorrow is going to be interesting. That's all I'm going to say. I think we might have hit this short-term top personally, and I think you'll start to see things struggle. I mean, from the lows made in that Tuesday low, I mean, a lot of stocks have come up 10+% in just 3 days, and so I think you've had oversold conditions kind of be reset a little bit, but you still had a lot of these stocks break down. You look at a core core leader like TSM continues to break down weekly, make new weekly lows, things like that. And it just looks ugly. I mean, if we were close to the bottom, and maybe this is what the bottom looks like, I just feel like we would see, I don't know, maybe more of a basing and less as much of like this volatility where it's up 6%, 7% in one day. Often I think the only news that came out today relating to semis was like Samsung reported good, but the headwinds are coming for this quarter. No one really cares about what happened, in the previous quarter. But yeah, I don't know. I think we're definitely going to be closer to the top than the bottom, and then we'll have another leg down.
Okay.
In my opinion, I still think we have a little bit of room left on the upside. Remember, in bear markets, the bear markets are vicious. And normally in the bear market, you want to, when you think that it's time to buy, you should actually be selling. And when it's time, when you think it's time to sell, you should be buying. So more people lose more money in bear markets trying to trade these markets than the other way around. So I still think that the market could easily run up to 50-day moving average, which is about 4,000 or so on S&P. And so I would not be surprised. And on the one sector that I think that has gotten whacked too much and has starting to create some values as SaaS stocks, so software stocks that I think they were first one to go down, and some of these stocks are starting to they'll start to find footing before anything else.
Yeah, I'm glad you mentioned the thought process of buying when you want to sell and selling when you want to buy, because the question that we had in the chat was, do we see the current structure as almost a dead cat bounce? It seems like the current downtrend that we're going through has some resemblance to the 2000 tech bubble pop, as well as 2008, 2009 financial crisis, where it was kind of like, spread out through other parts of the market. It seems like right now, almost everything is getting cleaned out to the downside. So what you're effectively saying is, yeah, it's still chop. We could, maybe start creating a base here. We could run up to the 50-day moving average, but it's still like really up in the air, way too early to tell, correct?
Yeah, the trend line is still downward. So, but in the bear market, normally these sort of rallies will, average person thinks, hey, markets run up, it's time to short. And they'll prove you wrong time after time after time, So be patient, markets in the bear market, markets tend to track moving averages.
Okay.
So look for those moving averages, and those are probably the right time to be taking a profit or putting on shorts and stuff.
Fantastic. We have one final question for Faisal, and then we will wrap it up. Faisal, what are some small to medium cap stocks in the AI sector?
Oh, small to medium.
Or just in general AI?
I mean, in general, you could go with NVIDIA. I really like Tesla. I think there's there's so much uniqueness to what Tesla and NVIDIA are doing with their combination. I think personally that Tesla will be the first AI driverless company where they'll have AI taxis, things like that. They're just so far ahead in their process of collecting data, using it to beef up AI, because I mean, it's so tough to try and program every scenario for wireless driving. I mean, this is what Waymo tried to do in the beginning and things like that. And they've had so much trouble. Google has been spending so much money and time on this. And I think just the way Tesla collects data, uses it, implements it, and I think Elon Musk he's a CEO that can pivot like that. And I just think Tesla and NVIDIA are both AI dominators. And
what about Teradyne?
Teradyne is more in robotics and you know, small robotics. I didn't like the last quarter. You see that drop that happened. That was a terrible quarter.
I mean, this company is a very good example of having a bad manager.
Yeah.
These guys, their product demand is going through the roof, but they totally mismanaged on the supply chain. They did not anticipate what they needed and how much they needed and so on. They screwed up on every front.
Yeah. And I mean, the previous quarter, they had led no indications that there were any type of supply disruptions or any type of demand fallouts or anything like that. And it just felt like, I mean, that quarter was one of the worst quarters I'd heard from a CEO. It was just terrible. So Teradyne got a lot to do. I love their product line. I love the industries that they're in. They're in semiconductor testing. They're in robotics and things like that. So they're in very good industries, but just like Austin said, it's a lot of times it's about the manager, and it just seems like they're not really managed that well.
Awesome. Well, fantastic, gentlemen. Thank you so much for your time. I think we'll wrap it up.
Real quick though, just for people who are looking for growth, you know, I think Austin was talking about SaaS companies being at a good valuation. I think valuation is a little bit of just a gray area right now, but if there's one area that I would pay attention to, and this is very obvious, but people should really pay attention to it, is cybersecurity. I think out of all the SaaS companies and all the SaaS industries, cybersecurity stocks have the clearest tailwind. They have the, I think CEOs and people in as executive positions have said cybersecurity is like the least likely area that they're going to cut spending on and things like that. So their sustainability, even in a recession, it doesn't seem like cybersecurity spending will necessarily drop off because attacks are just ramping up so much. So, you know, just to touch on that AI thing, I think CrowdStrike has it's CRWD. They're known for their AI endpoint system. And I think SentinelOne, ticker S, also has AI in their XDR or something like that system. Both those two implement AI to a high degree, I believe. So, you know, when you start to see these companies, these are premium companies in their respective industries. When you start to see them do good and break out above resistance, that's when you can safely say, okay, I think the market is buying growth, even though they are relatively way more expensive than every other industry, even, you know, in terms of technology. They're going to get bought first because their tailwinds are so high. And so when you finally get that confirmation, that's when you know growth has really hit its bottom potentially.
All right, perfect. Well, again, thank you guys so much for joining. Hopefully we do this again soon, and hopefully you know, some of our predictions and thoughts for the rest of the year come true, so we can all make some good money.
That's the idea.
Yeah, that's it.
All right.
All right. Thanks, everybody. Y'all take care, and see y'all soon.
All right. Peace.
That castle sounds so